Hello friends, welcome to the month-end series of BFM. As you know, in month-end series we are covering all the subjects of CIB, compulsory ones. We are covering the numericals, objective questions, case studies, repeated questions from the exam. Everything is covered. So follow the series completely till the end. All the subjects, follow all the subjects. Okay? Importantly remember, you don't get the repeated questions anywhere on YouTube or Google, anywhere. You get it only at Adda 24/7. Why? Because we have a bunch and lot of students. We are the leaders in this market. Okay, so that's why we have a lot of students and we get the recollected questions. So follow the channel without fail, JAIIB CAIIB English Medium. Okay, let's move on. Today's topic is operations risk and basically integrated risk management. That's the full name, operations risk and integrated risk management. So in this, see, ops risk is one of the important risks in the bank. Main is market risk, which you cannot control at all. Credit and operations risk, that is in your hands. But operations risk relates to what? Ops risk always relates to, number one, the employee issues. If the employee is having some problem, means some error from the employee side, or even the external factors like floods, famines, dacoity, terrorist attack, that also comes under the operations risk. Your server is down, that is also operations risk. Okay, you do the legal problems, means legal documentation not proper, that is also the operations risk. So operations risk encompasses a huge amount scope in the banking sector. Okay, so we'll be covering the questions not only related to ops, some related to other risks also, because you need to be complacent, okay, with all the types of risks. So let's start. A bank sanctioned. Now this is a very tricky question. Everyone have a check on this. Read this first. A bank sanctioned a term loan of rupees 10 lakh for a period of 7 years at 3% plus base rate of 9%. The funding of the loan is from a 3-year deposit at 7%. Till now this is clear. While processing the loan, the branch missed on getting the mortgage done. The loan went into NPA. So it is what risk now? Now the loan has gone into NPA. There is always a very small tricky line in this question. Everything else is of no use to you. That bank sanctioned a loan of 10 lakhs for 7 years, base rate 9%, deposit is 7%. All this is crap. Question is really different. Question is only this: missed on getting the mortgage. Missed on getting the mortgage. You'll say, how can the bank miss on getting the mortgage before giving the loans? It happens. There are many cooperative banks who don't even mortgage. I have seen personally right now, this year. It's not some old ages of 1990 or 2000. Today, there are many banks who miss out on taking the mortgages. This is what type of risk? The loan has went into NPA. So this is basically your ops risk, isn't it? Basis risk, reputational risk, all of the above, forget it, all these things. Operations, you have missed it, very simple. Why did you follow it? Who checked it? What was the checklist? Where's the checklist in this? Yeah? So these things are to be answered. Here, ops risk can be managed, kindly note. Operations risk in any bank can be managed if you have a proper checklist. You need to have a proper checklist, okay? So, operations risk. This is the only crux of the problem. Remaining everything is okay. Now, let's do some theory part. Operational risk here, questions we did. Now I have reversed this time. Every time what do? We first cover the theory, then the objectives. Now we have covered the objectives first, now the theory. Let's see how you like it, isn't it? Operational risk. The risk of loss due to internal failures. In fact, I am having some questions. Don't think that questions are over. Few questions I will be still taking. The risk of loss due to internal failures, employee errors or external event. This is related to this earlier question. See this, missed out. Okay, that's why I have taken this over here. The risk of loss due to internal failures, employee errors or external events. Okay, means employee errors. This is an employee error. Then operational risk can include fraud, technology failure. So these are the other things which can be included. Fraud, technology, cyber security. Okay. Operational risk can be managed by improving internal systems, controls and training employees. Systems, controls, checklist here. Everything is checklist. Everything is checklist. If you have the checklist and follow the checklist, ops risk and credit risk can be controlled. Ops risk and credit risk can be controlled. Market risk you can't control that much, but ops and credit can be controlled. So this is basically the logic of operations risk. Okay, got it? So employee errors, fraud, technology failure, cyber security, then internal systems, controls, training employees, everything. By any which ways, your branch will be closed or you can't service the customers. Okay. Next. RBI has issued internals here. I told you the questions are there. RBI theory I'll be covering it some part later. RBI has issued internal control guidelines for foreign exchange business. Under ICG means internal control guidelines, which of the following limits is not required by banks for forex operations? Again, here comes the operations risk. Which of the limits are not required? Because what did I say? Checklist. Checklist is over here. Which of the points are not there in the checklist, not required in the checklist? Overnight limit, daylight limit, exchange limit and gap limit. Now we are talking of only operations risk. Okay, we are only talking of operations. So which of them is not included in the operations risk? Overnight, daylight, exchange and gap. Yes. Okay. Answer this. What is overnight limit? Overnight limit means this is called as EOD position. EOD. We have this cash now in cash. In a daily cash in a branch, we have this overnight limit. We call it volt limit. Volt limit, right? Volt limit means this overnight limit. Same thing is there in Forex also. Okay. You have overnight limit or EOD limit for every dealer, every trader. Okay, you have overnight limit for every trader. Daylight limit means during the day, how much Forex can you handle? Same thing is there in a branch also for cashier. Can the cashier tomorrow bring the whole cash from the vault and keep it in the teller area? No. There is a limit given to this person, daylight. Okay, so that is daylight limit. Overnight limit, exchange limit, gap limit. Now what is this? One of these two is not there in this operations, Forex operations. Exchange limit, see here, exchange, Forex, foreign exchange. So exchange will be there. So exchange limit is there. Foreign exchange limit for each currency is given. What is the exchange limit? Each currency, how much can you handle? Each currency. Okay. So that is exchange limit. I can have this much limit on dollar. I can have this much limit on pounds. I can have this much limit on Australian dollars. Okay. And what is gap limit? Gap limit is not the part of your operations. Gap limit is related to your this market risk. Okay. This is totally different from the Forex operations. Got it? Gap limit means your Mismatches, basically mismatches. Gap limit comes when? Gap limit comes when you have mismatches in the maturities as well as in the amounts. Okay? There gap limit comes. So this is not the part of your ICG. For Forex, only for Forex I am talking. Next, a huge strike. Now read this. A huge strike is going on, taking place in a factory in Rajasthan. The materials which need to be exported are not ready by the deadline. In this case, which type of international trade risk is experienced by the buyer in Seattle, USA? So the buyer is in USA. Goods are exported from our country, Rajasthan. Now, which type of risk is experienced by this buyer? Yeah. Is it political, shipping, exchange, or operational risk? What did we see in the operations risk earlier? Let me show you. See this. Fraud, technology failures, cyber security, then employee errors, external events, internal failures. So this strike is a part of this part, internal failures, external, all these two. Okay. So this huge strike is a part of your operational risk. Okay, operational. Got it? Which of the following is an important factor for limited hedging of operational risk? Important factor for limited hedging. What is limited hedging? Firstly, what is hedging? Hedging means controlling the risk. How do you control the risk? Yes. How do you control the risk? Operations risk. By preparing the checklist. By giving training to the employees. Just now we saw it. Training to the employees. So, limited hedging of operations risk. Absence of commercial vendor to sell operational risk data. Absence of commercial vendor, which is an important factor. Means what are the factors? Okay. Absence of commercial vendor to sell operational risk data. It can be one. Operational risk process correlations are fixed and known to buyers and sellers. So processes are fixed and known to buyers and sellers. Operational risk assessment is an objective and rigid. Okay, is objective means to the point. Objective means to the point. It's very clear, crystal clear. That's known as objective. And rigid, very firm, strong. Identifying operational risk accurately that are not yet apparent is a competitive task. So which of them is an important factor for limited hedging? Limited hedging means controlled hedging. Which will affect your hedging of operations risk or limiting of operations risk? Which will help? Identifying operations risk accurately. This is correct. So this is true. Absence of, you want a correct factor. Huh? Absence of commercial vendor. If you don't have vendor, then what happens? You can do it internally. Why do you need a vendor? Operations risk is the internal part. So, if you are a big company, then you will be needing vendor. Otherwise, you don't need it. You need internal employees. So, this is not the main factor. Operational risk process correlations are fixed and known to the buyers and the sellers. What happens by knowing to the buyers and sellers? Buyers and sellers, how will they affect the operations risk? Buyers and sellers are external parties. Operations risk is related to your internal system. Again, no relation. Operations risk assessment is objective and rigid. Rigid. Objective is okay. Objective I understood. What about rigid? You don't change it. Rigid means once done is done. No changes. You can't have any rigidness in anything in life. You have to keep on changing. Okay? So, operations risk, rigid, not allowed. So, the answer is this only, isn't it? Identifying operational risk accurately and that are not apparent is a competitive task. Competitive means what here? Whatever is going on in the market, as per your competition, you have to be in that race. Whatever others are doing, you have to do that. Okay? So identifying operational risk accurately that are not yet apparent is a competitive task. So this is the real factor. So this is the D answer, right one. Okay? Now let's come to the theory part. Operations risk theory is also equally important now. Kindly note. Theory will be covering some important parts. What are the operations risks? What are the causes? How to manage it? Very important terms will be covered over here. Operations risk in banking is a risk of loss that can occur due to internal or external factors. These losses can be financial or non-financial. So internal or external, what is internal factor? Internal factor means internal or external factors, this one. Internal means your employee factors. External means external is not related to market. External is related to your floods, dacoity, theft, terrorist attack. These are also operational risk. Okay? These losses can be financial or non-financial, both financial or non-financial. Non-financial means what? It is known as reputation, reputational risk. Reputation. Tomorrow, if in the whole banking world, the name goes that your banking software are very lazy softwares, very slow softwares. Tomorrow, if the whole world comes to know about some bank, what will happen? Will you go to that bank? If tomorrow you come to know that some bank software is very slow, it requires a lot of time, will you go there? Definitely not. So this is non-financial, directly non-financial. Sure, indirectly it will be financial only. If you don't go, it means what? You will definitely lose the customers, isn't it? So ultimately everything relates to finance only. Even reputation risk relates to finance, isn't it? What are the causes? Internal fraud. Very important. Many a time this problem arises. Internal fraud. Many times internal fraud. Majority of the frauds in the bank are somewhere related to some employee. Either intentionally or unintentionally. Somewhere they are related to the employee. So internal fraud. Okay? When the employees steal, embezzle or engage in other fraudulent activities, okay? Steal, rob, okay? External fraud, when there is third party, means actually employee is not involved. Third parties such as clients or hackers commit frauds. Nowadays this hacking system is very common, isn't it? So hackers are a major problem nowadays in online banking. That's why many of us say that no, don't do online banking. Fraud होते हैं बहुत, पैसा कहाँ जाता है मालूम नहीं पड़ता. We don't know. Somebody in America will steal your money. These things will happen. For that you have insurance also. Somebody steals your money, you will get it back from the insurance company immediately. Okay? Systems and process failures. Systems not working, internet link नहीं है. You commonly see this ना in your bank. Link नहीं है. Sir, system क्यों नहीं चल रहा है? Sir, cash ले लो ना. Link नहीं है. I had seen in one bank, when one of the biggest banks, biggest private banks, I won't name it now. I went to the bank. Private banks, not nationalized banks. Private banks. I went there and link was not there. I told the cashier that, see, okay, link is not there, it happens. What do? You take my cash, give me the slip, receipt, and you make the entry till the day end. Whenever link comes, make the entry. No. When link is not there, we can't take the cash. I said, what? Yeah, we can't take. How can we take the cash? What is the problem? Wasn't there cash transaction before internet banking or before computers? Wasn't bank working before computers? I called the manager. Manager was one step ahead. No, not at all. We have an audit requirement. Our auditors told so that you cannot take the case. I said, oh my God, such a great news it's for me. I told him, give me the audit report. Show me the audit report. Okay, I told him one basic step give me. Give me in writing right now that I can't accept the cash because my systems are not working. Give me in writing. Let's see. Which audit will tell you to not accept the cash when the systems are not working? Illogical. It's in private banks. So don't think private banks are something better or something, nothing. Many a times everything depends on human being. Okay, what type of human being there it is we are facing. Okay. So coming back to the point, internal fraud, external fraud, system failures. Here, operations risk, every time it happens in the banking. Only the question is, how do you handle it? Link not there. So will you keep the customer waiting? If it is very serious, means that related to system only, then you can keep the customer waiting. You can tell the customer, let's see, so and so has happened. So that is force majeure, means beyond our control. Okay. Employment practices and workplace safety. This is also one of the reasons for happening of this ops risk. When the employees are discriminated, injured, labor laws are violated, this thing happens. Injured. Many times there are attacks. You see, mainly the attacks you see in hospitals. If some patient expires in the hospital during the operation or anything, people are very wild against the doctors. Injured. Same thing happens in bank also. If you make some error means something error happens due to systems or anything, and customer loses money. I have seen this experience. I have done this personally. I have seen the experience. There was a fight between the bank employee and the customer, and customer literally almost he kicked this employee in the branch itself. Injury. Why? Because of something was not done. Again, it might be due to anybody's fault. It can happen. Even the employees are so much stressed up nowadays. Sometimes it happens, but it should not happen. Literally, I'll tell you, it should not happen. Because we are being paid for the same. Okay, so it should not happen. But sometimes if it happens, and you shouldn't get on to these fights. No customer, no employee. Even from the employee side, I would say the same thing. So injuries, labor laws are violated. Regulatory compliances, when the bank fails to comply with the regulations, RBI regulations, SEBI regulations, IRDA regulations, anyone can fine you now. There are so many regulators, and bank is involved in so many institutions or the businesses now. Bank is involved in insurance, mutual fund, then RBI is obviously there, SEBI, share market, RBI is involved, banks are involved. So anyone can punish you today, compliance wise. Cyber security, this is the main problem which we are seeing nowadays, isn't it? When the bank cyber security is compromised means somebody steals the money. You see these Nigerian frauds. Do you know what are Nigerian frauds? You get these emails mainly from Nigeria. The name has come, it's not only Nigeria, it's from various other countries also, but mainly these have come from these African countries. So that's why they are called as Nigerian frauds. You get an email, you have won a lottery, you have won something like this, 100 crore lottery, all this. So then these are all Nigerian frauds. Then third party risk, when a bank's relationships with the third parties are not managed well. Now what do you mean by this? With the third parties. Now these are basically related to the suppliers. If you don't manage the relationships properly with the suppliers, now how will you maintain the relationship with the supplier? Number one, by giving them timely payment. That is very important. Timely payment is an important aspect in any basically relation, specifically in commercial relation. So third party is that. Okay. So you have to maintain this third party risk and maintain the relationships with the third parties. Now how to manage the operational risk? See this risk identification. First you have to, these are the important steps in managing the operational risk. First is identification, next is assessment, third is mitigation, fourth is continuous review, internal audits, and last one is insurance. Now, what do you mean by all these things? Insurance, see, first you have to identify any type of risk. Without identification, how will you find a solution? If you don't know the disease, how will you find out the medicine, isn't it? Then assessment, assess the risk, gravity, what is the level of risk. Then mitigation, find out the solutions for that. Try to mitigate this risk. Continuous review, whatever solution you have provided, try to get the continuous solution on that. Okay, means try to keep the monitoring on it. Got it? Continuous monitoring. Internal audits. So this monitoring is done through this continuous review and internal audits. They go hand in hand. And last one is insurance. You can also call this as derivatives. Okay, risks are controlled through derivatives and insurance. Suppose if you are giving a loan, that loan is controlled, means how to control that loss of the loan due to some security loss. Suppose if the security is burnt tomorrow, you give a home loan and there is a fire in that building. So how will you cover that? That is covered through insurance. And if your loan becomes NP, how is that covered? Security is intact. Security is not having any problem. But the loan has become NPA. That is covered through derivatives. So kindly note, insurance and derivatives are the two important aspects for covering the risk in any of these loans. Okay. So that was it about the ops risk. Now before going, I would suggest everyone to join the new batches which are starting, officers batch. Let me show you. Go to ADDA 24/7. Always go through the app. Okay. In the app, you will be getting 1% extra. Okay. Always download the app first and then join. See, go to ADDA 24/7. See this CIB increment Mahapack. You will be getting this. Plus, see, first I will show you about increment Mahapack. This is one of the best tools for you. Because in CIB increment Mahapack, you get physical books as well as e-books. Then you get the formula bank, separate formula bank. Okay. Plus you get 15 plus batches per subject. Plus now you are getting 6 plus 6 months validity. You buy for 6 months, you get it for 12 months. Buy for 12 months, you get it for 24 months. And 81% discount is already there. Click on buy now. Look at this. Put the code Y432. Y432. Okay. Enter. Look at this. 80% discount plus 1% extra through the app. So this is about Mahapack. CIB increment Mahapack. Join this Mahapack. Also I would suggest join the new batch which is coming up. Officers batch. Okay. See. Officers Pro batch. Okay. Join this batch. Starting from 25th July. Say just now. Then officers, this you will be getting ebooks, mock tests, online live classes, recorded sessions, all these elements. Plus, you get various numericals are covered, objective questions are covered, various repeated questions are covered. So everything you are getting. Join it ASAP. Okay. Again the same code is same Y432. Don't forget the code. Then only you will get this 81%.